Hi, this is Linda Eedes. I'm going to give you an update on the RECM Global Fund for the fourth quarter of 2016. I think the biggest impact on markets during that time was, of course, Donald Trump being elected the US president. With his plans to cut taxes and regulation and increase infrastructure spending and the likes, that actually had quite a stimulatory effect on the US markets. And you saw interest rates rising in the US and pretty much across the globe, including in South Africa, in anticipation of higher inflation and, of course, higher interest rate hikes as well, particularly in the US. That produced a bit of a mixed bag for the Global Fund. It was broadly flat, slightly up 1% for the fourth quarter of last year. And some of the things that contributed to that were, of course, our resources exposure on the industrial metal side. So you saw copper prices rising quite significantly. That had a very strong positive knock-on effect for Antofagasta, which is, of course, the big Chilean copper miner. Stocks such as BHP Billiton also had a similar rally for the same reasons. On the other hand, other resource stocks such as our platinum producers, Amplats and Implats, were actually down in the fourth quarter. For some reason, platinum prices didn't move along with other industrial metals prices, despite the fact that obviously they do have an industrial usage. But in fact, they moved in sympathy with gold prices, which were down. So on the other hand, there were a lot of financial stocks which benefited as a result of interest rates rising, the sort of expectation of that having a positive knock-on effect for the financial sector. So some of the financial stocks in the portfolio fared well as a result of that. And then there were some very sort of company-specific issues which caused some of the shares to be down in the fourth quarter. Companies like Rolls-Royce, which came out with a revision to their accounting policies, which will probably see their numbers being revised downwards. Issues with a particular jet order for Emirates, the Gulf airline, and companies like Amazon sort of not quite meeting expectations that analysts had in terms of the results that came out during that time. But overall, another positive quarter for the Global Fund, and that actually sees the Global Fund up 18% for the year over 2016 versus the sort of global equity market, which was up 8.5% during 2016. So looking at the portfolio positioning during the fourth quarter and looking at the sort of management actions which we took over that time, I think the most notable thing is that we continue to increase equity exposure, and that's through a few new investments in the fund as well as adding to parts of the market that we already had exposure to where prices were weak. You can see that the equity exposure is slightly under 84% now, and that's up quite a bit from the start of this year where the equity exposure was only 61%. So I think that reflects a broadening of the opportunity set on the global side, which is great because 2 years ago, if you looked at the portfolio, you'd have seen that there was a very high concentration to resource stocks. That was really the only area of the market that actually offered compelling value. And over the last 2 years, what's happened is that other pockets of the market have become cheap. And within those pockets, we're finding high quality businesses that are trading at very attractive prices. So if you look at that top 10, for instance, you can see that in fact, very few of those are resource stocks, only 2 of them are resource stocks. Of course, that's Inpex, the energy producer, and Impala Platinum in that list. And then you've got a wide mix of retailers, sort of more on the sort of non-differentiated consumer side, like Tesco. Sonai is sort of the Tesco equivalent in parts of Europe. You've got industrial companies such as Alfa Laval, Agreco, high-quality businesses which offer specialized products and services to industries such as mining, and have obviously taken a bit of a knock as a result of that, but are good companies fundamentally through the cycle. And then sort of even some financial exposure. You can see, of course, Berkshire Hathaway has quite a bit of exposure to insurance, and then you've got UK Bank there, Standard Chartered, which actually has quite a lot of emerging market exposure. So we had some new investments in the fund as well during the quarter, and that included UK Bank, Royal Bank of Scotland. Of course, this is the bank that got into quite a lot of difficulty during the financial crisis, had to be bailed out by the UK government, who are still the largest shareholder. Obviously, that bank has been through a huge process of restructuring and cost-cutting and litigation expenses. And sort of after this whole process, it's going back to being a UK core franchise bank And at current prices, that represents value, in our opinion, looking sort of through the cycle from this point onwards. We also invested in a Brazilian bank, Itaú. The Brazilian banking cycle has been through quite a low as well, and that provided us with the opportunity to buy Itaú, which is Brazil's largest and most profitable private bank. Another example of a new investment is Scripps, which is basically a pay TV network. They own channels that you would recognize, such as Food Network and the Travel Channel, and that whole industry is going through quite a sort of change, and we think that Scripps is very well positioned to still do well despite sort of quite a lot of disruption there, and at current prices does represent value. And then we did trim our resources exposure where things did very well. I mentioned the industrial metals did have quite a rally in the fourth quarter, so we brought back our exposure to things like Antofagasta and BHP Billiton, and actually sort of took the opportunity to slightly increase our exposure to some of the platinum producers. So looking at the fund as a whole, I think the great thing about the market at the moment is that it has given us the opportunity to actually have a very diversified portfolio of value opportunities. And we saw in 2016 that the markets have shifted very much in favor of value investors for the first time in a long while. And we think that that trend will continue for quite some time. It's still very early days in terms of that value cycle playing out. And the Global Fund is a portfolio of undervalued businesses with a strong focus on quality businesses, and it offers investors a great opportunity to see that unlock in value as the cycle continues.